Good morning. It is April 27th today. We got some macro in today. And what did it tell us? It said, for those who are bullish on the equity markets, good things. It said, hey, GDP is slowing. So that counters the argument for the Fed hiking rates. But we would argue it's looking lower because of inventories. So we think the growth is actually still pretty strong. And the opposite side of that coin of data this morning is that inflation's very hot. We're going to be getting some labor data in on Friday, and we'll see if that confirms or contradicts the inflation data out today. But the other reason why markets are up today, obviously Facebook had a great earnings report. I think people are cheering, hoping Amazon after the bell today is going to do well. But we're going to take you over to the Longbow dashboard. We're going to talk a little bit about what's on the top 25 tab, and then look at two different big ETFs and mark for you what's going on with the different sentiment and technical trading. So let's head there. So what do we see here? I'll take you to the top 25. If I take you there, I'll just tell you what the answer is. There is a lot of inverse ETFs on the right-hand side of the page. So the highest trading range odds to the downside, things that could go down, you actually see, ultra short, the SEO, you've got the EPV, you've got, short financials, lots of stuff over here, short, extra short SPY, 500 bear 3x, short IFA, I don't even know, tail risk strategy, everything's over here. So things that could go down. So this is obviously an area of concern. If you're in these positions, take note. And then what could go up? We've got Russell, we've got other securities value for S&P over here. And then I wanted to show you two securities here, and it's call it like a tale of two fates. You've got the SPY, and it's in the middle of the range, but we're getting an okay long core signal for Longbow. When do we get that? We get it usually when it's below the end of the trading range, the low end of the trading range, and that's not happening right now. But you also get it when you're getting this bullish medium-term signal. It's a neutral, high implied volatility premium, so people are using the security, probably buying downside protection because they're worried. And then I'm going to take you to the KISS view. Other things to note is that you've got the trading range. What's going on here? It's heading a little bit lower, but it's most likely getting flagged here because of the high premium, the implied volatility premium going on. And if we look at the SPY, what's happening? We were at the low end of the range a little bit. We popped back up today, given what I said before on the growth data, as well as Meta earnings and a few other companies. Cat, strong. We marked it in the Longbow arrows today. Lilly, solid, raising guidance. So a lot of companies out today. Good stuff in terms of earnings. But we're cautioning here that, we'd be a little bit careful because look what's happening under the hood with the Russell. Russell obviously has smaller cap companies than the SPY. It's really a different situation. So instead of being bullish on the medium term, it's bearish. It also has a neutral position. It has people really middling, so they're not paying up for protection. They're not too worried. And this before was actually flagging oversold. And if I head into the Russell, I'm going to give you a little bit more data here. We've really narrowed in terms of the range. So we're pretty thin here on the range. It's really getting close to the low end of the range. People are really more worried about small caps when you are heading into a slowing environment. That's really different. You want to be owning the Russell or small caps when you're kind of coming out of the bottom and heading into a pro-cyclical environment. I think people know that that's not what's happening right now. Also, they tend to have less cash flow to deal with hiccups in revenues, profits, needs for CapEx, dividends, and the like, especially share purchases if companies and their shareholders are hoping for that. And so there tend to be what people consider a little bit more risky. And so that's not what you want to be heading into a downturn. With the growth data seeing today that it's slowing, it makes sense that this is in a very different setup than you see on the SPY, which has larger companies. Obviously, a ton of tech. Tech has been on fire. Lots of good reports from Google. You've had Microsoft. You've got Meta coming out today after the close. You've got Amazon. There's a few more. I think next week is Apple. You've got a few more other big tech companies reporting here this week. and you're going to need to see them doing well. So if ads are strong digitally for Meta, most likely you're going to see that for other companies, but the proof is in the pudding with what they're saying. And they're also going to be having to talk about cost reductions and how that's going to help cash flow. So when you're thinking about positions, today's not the day, we don't think, to be like going into the SPY. You have that risk set up for tomorrow with inflation-related data on the labor side, which really is going to be important for the Fed to keep watching. We would argue that this whole idea of pausing and then cutting is something that you shouldn't be buying into. The economy is still fairly strong. That's going to keep inflation high. And you know what the central banks are going to have to do? They're going to have to fight that inflation. So we would be cautious, again, buying into this rally, especially from a small cap perspective. That's it for today, and we'll catch you back tomorrow.